Hello, this is Brian Rezny, president of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Well, we're firmly into 2022. Last year for our clients, another great year overall. Very pleased with our results, and I know we've talked to a lot of our clients, and they're extremely pleased also. So as always, if you have friends or family that are not happy with their current firm, we always appreciate your business and your referrals. Now, we're in the 2022 and we see an economy that will continue to grow. I know there's all kinds of talk about the Fed's going to raise rates. What can the stock market do? What will the bond market do? What about oil and real estate? We're looking at all these areas. And generally speaking, the economy, even if the Fed raises rates slowly, again, we're not going to see Jimmy Carter Day style interest rates, but slowly, maybe they've raised rates 1, 2, 3, 4 times this year, quarter point. Very manageable for the overall U.S. economy. And yes, the economy can do quite well. I'm not looking for the kind of returns we saw last year. In fact, the biggest thing that I want to stress to every one of our clients, we could have a 10 or 12% correction before we go up another 10 or 12%. Or we can go up 10 or 12% before we have that correction. But we're going to get a correction sometime this year, and I really try to emphasize volatility is extremely normal. It shakes out the weak people, the nervous people, the people that shouldn't be invested anyway. So it's kind of like going up 5 or 6 steps, coming down a step or two, and then going up 6 or 7 more steps. That's really how all investment markets work, whether it's, again, the equity market, bond market, anything. We go a number of steps up, we come a number of steps down. But volatility was pretty light last year in 2022, or 2021, excuse me. 2022, I'm looking for more volatility, so expect it. If you embrace it, it's not going to shock you. And again, emotional investing never works out. In fact, we had a client who was actually a newer client of our firm that hired us about a year ago. They did quite well, and they were really kind of nervous Nellies, I'm going to put it that way. And really the only client that we have that was really a nervous Nelly. And they would kind of send these emails into the relationship and, what do you think about going to cash? We heard there could be a 10% correction. We heard that the Fed's going to raise rates. We're scared. And what I try to explain to these new clients is that attitude and emotional instability when it comes to investing is only going to hurt you. Remember, you're not invested for today. You're invested for the next 5, 10, 15 years. And I know a lot of our clients are in their 60s, 70s, and 80s. And again, you're not going to spend all your money today or next year or the next 3 years. Ultimately, you want to grow that money, provide an income stream on a yearly basis from that money, and look for newer high ground with that portfolio. And that's really how money management works. So again, not that we like volatility, but it's a normal part of the process. So try not to be emotional. Try not to watch the news, which, by the way, is worthless. Even Bloomberg's at the point, in my opinion, that is really, they talk more about politics and the coronavirus than they really talk about the overall investment markets, which is really sad. I think if you turned on the news January 1st, listened to it for a half hour, turned it back on December 31st, you'd hear the exact same stories. That certainly was true for last year in 2021. Let me bring up a couple points. We obviously had an election. We have a new president in 2021. And one of the things I talked about is all the craziness of Biden raising taxes on everybody, 50% that they were talking about, doing all these crazy things and spending plans. Almost everything they talked about doing has not materialized. Did taxes go up? Absolutely not. Did they pass this gigantic spending bill they wanted to pass? No, they did not. So at the end of the day, politicians on both sides will talk a lot of rhetoric and all these magical things they're going to do or what they plan on doing. But when it really comes down to it, a small percentage of what they do actually gets accomplished. because politicians like to keep their jobs. So the Congress, obviously, and the Senate, they're going to vote appropriately so they feel they can stay in the power. So what do I see for this year? I see greener pastures. I see more volatility. I see the U.S. marketplace doing better than other places around the world. But again, we continue to monitor progress in other countries and other sectors and things that we may want to add into our portfolio. And again, if you have any questions about your portfolio, any concerns, call me at the office, send us an email, schedule a review appointment, either phone or office. Either way is great for us, whatever is great for you. And remember, we always enjoy your referrals and your business, and we highly appreciate that, and we thank you for your trust. Make sure you have yourself a safe and profitable day.